In this course, I will cover topics such as what are the major advantages of pre-construction investments over other forms of investment types, how to identify strong pre-construction opportunities and avoid bad ones, how to make sure that you maximize your profit potentials and minimize your risks as much as possible. What are the important logistics that you need to know about pre-construction sales and transactions, as well as what value do we add? How can we help you to make sure that you make a sound pre-construction investment? So without any further ado, let's get right into the course. Now, over the past 20 years, people have made tons and tons of money in pre-construction investment. Right now, I'm going to discuss 5 main advantages of pre-construction investment as compared to other forms of investment that is really promising and that is really attractive to a lot of investors. The first investment strategy is that in pre-construction, you leverage your returns. What does this mean? Let's say, for example, you have $100,000 and you want to do a form of investment with this and you have multiple options. Let's say your option number 1 is that you take this $100,000 and you put it in a bank. You get some returns from the bank. Let's say the bank gives you a 1% return. Let's put compounding to the side. If you invest your $100,000 in a bank with a 1% return, the next year the value of your portfolio will be $101,000. The year after that, year number 2, it will be $102,000. In year number 3, it will be $103,000. So over a 3-year period, your $100,000 has grown to $103,000. Not bad, but definitely not good either. Now, let's say another form of investment which is very common is mutual funds. For example, ETFs. Usually the rate of return is about 6%, give or take. So let's use 6% for your calculation purposes. So again, same thing, 100,000, you put it in an ETF. Year number 1, your return is 106,000. Your year number 2, your portfolio changes to 112,000, and your year number 3, your portfolio changes to $118,000. Now your return, average return yearly is 6%. $6,000 over $100,000 of investment portfolio. Now let's take the same example and apply it to pre-construction investment, and this will illustrate what a leverage return means. So you take the $100,000 and you invest it in pre-construction. You purchase a property that is $500,000. Now, when the market grows, this growth does not occur on the $100,000 that you invested. This growth occurs on the value of the property, which is $500,000. So let's say if the market grows at a very nominal in the GTA, let's say 5%, which is very common. 5% is nothing relatively. We've had 10%, 20%, 30%, 40% jumps over the past number of years. But let's say a very modest 5% return, a conservative 5% return that you get on your investment. So year number 1, the value of the property increases from $500,000, 5% return, $25,000, so it becomes $525,000. Year number 2, the same investment goes from $525,000 to $550,000. Year number 3 goes from $550,000 to $575,000. Now, your investment portfolio has increased from $500,000 to $575,000. But what was your initial investment on this property? It was only $100,000. So your return of $75,000 over $100,000 in the same 3-year period that you invested in, you put that money in the bank or you put it in an ETF, now you're seeing that your rate of return actually is 25%. So your $100,000 that you invested, you have made it now grow to $175,000. Now, the reason why this occurs is because you have leveraged the builder's portion of their investment, whereas when you invested $100,000, the other $400,000 value was builders, and the builder helps to accumulate you, helps you to grow this particular investment into the years to come. And when the market grows at a very even nominal rate of 5%, you're seeing massive returns. Now, I haven't even discussed what happens if the market grows at 10% a year. Well, now it's $50,000 a year of growth, and in 3 years, 150,000. That means you made 150% total return, or you made 50% return on your investment. What type of investment gives you those returns on a yearly basis? Not very much. So this is one of the attractive advantages, a very attractive advantage to a lot of the pre-construction investors, because they can take a small amount of money and they can leverage it to make it grow exponentially and make their overall net worth grow as fast as possible as compared to any other forms of investment.